Cool. Hello, everyone, again. This talk is representing Bico DAO, which is the second organization that I'm associated with. So to give you guys a little bit of context here, I've been in venture capital for 4 years, and I was one of the early backers of DeSci. Through the fund that I worked at, we invested in Molecule and Bio as well, and in VitaDAO. That's how I first got involved. And currently, I'm working with an organization called Bico DAO, which is, I think, the only institutional investor fully focused on DeSci. So this talk, I want to share a little bit of our perspective in how we're thinking about underwriting DeSci currently, given everything that was presented today and yesterday. Cool. So I want to start by actually giving you guys an example of something that happened, a couple months ago, where like an AI agent, an autonomous agent, was basically investigating a drug candidate for a target with no approved treatment yet. Basically shared some of the findings or some of the questions in the thought process on X. And we had actually very prominent industry figures publicly discussing these developments, fully live, fully open. The agent then ingested some of that feedback, basically iterated over it, and developed and settled all of that conversation into an IP-NFT on chain. So this loop is something that Web2 just cannot deliver. And this is one of the superpowers of Web3. We can build all of these things in the open, and we can actually grant ownership for people that participate in that process. There's a chart missing there, but anyway, essentially what I think AI enabled for drug discovery overall is that invention got a lot cheaper. The ideation process got a lot cheaper. Basically, AI compressed the top of the funnel by 30 to 70%, depending on which measure you take. But essentially, it still cannot touch, or still didn't have a major impact yet on things like ownership, things like capital formation, wet lab throughput, and regulatory acceptance. So these are the four areas where I think DeSci really comes in, and the areas we're actively looking at in terms of capital allocation. The first thing really is ownership. So this is one of the superpowers of blockchain. From day one, it was one of the core things that it enabled. It enables you to own your tokens, enable you to own your data, all of that. So yesterday we had a presentation for Kevin where he presented the Molecule Lab, where essentially ultimately you can have an ERC 6551, like a token-bound account where an AI agent can hold all of its information through this vault. And the agent actually has full ownership over that, which is pretty unique. Obviously, we have the Bio Launchpad as kind of the main capital formation vehicle. So this is basically where these AI agents can come and present their ideas and raise capital for it in the open with the public. And we recently had Adaptive Bio on stage as well, Julian, talking about how they are running some of these experiments with Peptide. And Peptide as an AI agent can only pay through blockchain rails. Doesn't have a bank account. So the wet lab invalidation through 402. 402, for those of you who don't know, is an HTTP native payment rail. Again, fully on chain. So this is only possible with blockchains. Cool. So given that that rail exists, how are we thinking about deploying capital, right? The way we see it, there is two races going on in parallel. One is the race to invent and build the best model. So this is where I think the traditional AI space, so to speak, is making loads of investments in. In our opinion, it's very crowded, very capital intensive. Sorry. And margins are commoditized essentially. The second race is the race we're focused on. Is basically the race to hold the tide of the output. It's where I think most of the scarcity is, and where the value accrues the most. One thing to note, though, obviously, the faster the race one goes, the bigger the prize and the bigger the output for race 2 as well. So I want to show you guys 2 examples of something that is already happening, already live. One is Peptide. You guys heard from Rafa extensively today. Basically, they have this closed loop peptide pipeline running with a bunch of AI agents, tested a bunch of different peptides with wet labs integrations through 402. And the other is Albray, which is the one that I'm currently involved with through VitaDAO, where essentially we have like a big data mode in that Albray was firstly trained over LAVF, some published lab notes. So you guys probably heard from Albray yesterday. He's Albray de Grey. He's the scientist that inspired us to build Albray. So essentially, VitaDAO was built on that, plus all of the academic research that is publicly available, plus all of the data that comes from the projects that VitaDAO funds. So VitaDAO, as I said in my last call, has funded over 30 projects, deployed over 4.5 million, and all of those projects are generating loads of data. And we're basically leveraging that data to further train and refine Albray. Cool. So how we're thinking about building a portfolio of assets, given everything that we're talking about here. The way we see it is really kind of like a barbell play, where we have high beta DeSci on one side, and this is things like Bio, things like ResearchHub, where Bio is basically, like indexing the whole sector. It basically has an ownership over every token that launched through the launchpad. And we have the long tail of assets, meaning being the AI agents themselves, like Albray, Peptide, but also the individual IP tokens, right? Like VitaFast, VitaRNA, you guys heard from Michael before. So VitaRNA is like an IP token. It is backed by the IP that is generated with the R10 Bio project. VitaFast, the same thing. We're accelerating it right now. We're going to talk about jurisdiction arbitrage in a little bit. So the way we're thinking about this portfolio is, these two different edges. And in the middle, we underweighted deliberately, and we have some DAO tokens still, like VitaDAO and HeriDAO. I think they're making quite a lot of progress in some areas as well. But that's how we think about the book. Like beta funds the weight, and then the tail pays off for being early. And we are actively involved in some of these IPTs and in AI agents projects, so we can accelerate them further. Right. So one of the things that we spend quite a lot of time thinking about as an institutional investor and a serious capital allocator is actually what makes all of this underwritable. Because I think previously in crypto we had like a major issue of buying tokens that actually don't give you much. So I think now you guys heard from Ben early on. One of the things that I think unlock a lot of value for investors is really the coin company model, which allows you to own tokens and equity in parallel. It actually gives you rights as an equity holder over the financial upside of that project. So if that IP ever goes to the market, if there's ever a drug created from that IP, if there's ever royalties created from that IP, that the proceeds of those sales will flow to an entity, and as an investor, if I hold a token, I can actually qualify to have equity in that entity as well. So I think this is one of the main unblockers that we have currently, and it's very, very important from an institutional perspective to have this working smoothly. So very, very keen to see the first projects implementing coin company in real life. And if you guys remember the 4 items that I outlined before, the fourth one that we haven't talked about yet is really the regulatory landscape. So I think, obviously bringing a drug to market is a very tedious and long process and very expensive process. One of the main reasons for that is, how strict regulation is for some of these things. And I think one of the superpowers of decentralized networks is that it actually is global and distributed, right? And what that enables essentially is for you to tap into jurisdictions that are perhaps more open to running a trial with like a little bit of like lower thresholds. Still safe, obviously, but I think this is one of the superpowers of DeSci really, and it's one of the things that we're leveraging with VitaFast, for instance, where we've been in talks with the regulators in the UAE, and they're pretty keen to first of all back longevity, which not all jurisdictions are, but also to run trials in a much faster and cheaper way that you would do in any other jurisdiction. There's other examples of that. I think VitaDAO is doing something in India as well. So anyway, this allows us to basically bring these drugs to market a lot faster and a lot cheaper, which I think is one of the core blockers of DeSci as well. So yeah, all in all, I think DeSci is running this different race where we have AI agents and massive acceleration of these research projects. And as institutional investors, we are keen to support founders and projects willing to work on with us on that. We're basically positioning ourselves as a settlement layer for autonomous biology. That's how we're thinking about it. Thank you, everyone.